Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the recent brutal sell-off for the Australian dollar appears to have settled in front of the key support level at 66.8085. After many attempts on this downside, the market has held respectively since back in early July. Overnight, the US Producer Price Index, or the PPI, reported for August fell by 0.1% from the prior month and has relieved some inflationary pressure. Still, looking today, the Australian job numbers came in under expectations after 33.5 thousand jobs were added, missing the forecast of 35,000.5, while the unemployment rate rose to 3.5 from an expected 3.4. Also, the market is looking to see whether the challenge to the upside can continue after the recent sell-off has pared back some of the losses. All eyes turn to the RBA Governor Lowe, or Phil Lowe, speech this Friday and see whether that would inspire the bulls to return. The market is still pretty much shook up after Tuesday's key US inflation report came in hotter than expected after the US Labor Department reported that the US CPI came in at a record 8.3 high in August and above expectations of 8.1. This is pretty much locked in a potential rate hike next week for the US Federal Reserve, anywhere from around 75 to 100 basis points. However, with much work to the upside for the Australian dollar, there's still a couple of levels to clear to reinstate the bullish case. That is at 67.65, C minor, and a key level at 68.0515 now, which would ignite the move back to the 69.35.75 area, where we recently challenged before the sudden drop earlier this week. Looking to the downside, the key support level, as I mentioned, is at 66.8085, and if we do see a break there, or a close, that is, of New York, that would reopen the down case to around 64.8090. Looking at the euro, the market is still respecting this key level, which is seen at 98.8085, and while holding, may actually eventually see a rebound to claim the top side around 10015. If seen, would reinstate the bullish case back towards that downtrend, which is around 101.6080. All eyes have been on the Bank of Japan after there was some reports that the central bank was conducting a rate check with other banks on Wednesday. However, there was no reports of actual yen buying intervention. Still, the market has been a little bit nervous towards that top side around 145 to 146 after back in 1998 we did see an intervention from the Bank of Japan. Other than that, we can still see that there is a bit of a trend line coming through here that may support the case if breached, which is around 142.75, seen as minor. A close under there could give further indication to the downside to target the 141 area. I like the way the technicals are remaining somewhat heavy, and if we do see a break for the midway point, could trigger the bearish case and therefore ignite the move to the downside anywhere to 141 or even to 139.5. I feel the market has way overextended itself since it began its journey around 131, and it is warranted for a pullback, especially with the technicals breaking down. Looking at sterling, the market is attempting to pair off some of its losses, and with the technicals also holding to a somewhat bullish potential rise. That is, if we see a break for the midway point, could see further gains up to 115.45 to 115.85, and it is viewed a break above here would reinstate the upside to at least the target around 117 to 118. However, this engulfing candle has put a little bit of a stop on this call to the upside, but I wouldn't say that it actually has reinforced the downside case until we get that break. However, above 118.85, then we still could see a little bit of a mixed price action into the coming session. The price action for gold still remains heavy, and looking down to the challenge of 1,680. If we do see a break there, that would give further scope towards the region of 1,635 to 42. Keep an eye on this support level. I'm not saying the market will go here. That is to the downside to extend its bearish case, but there is evidence of the ADX starting the trend. There is evidence that the market is married to the bear case to the MACD. I feel that the bears do or are in a prime position to take the challenge lower, but whether or not we see a break here remains till the European session starts in very, very soon. And wrapping up with oil, the technicals are a little bit weak, and if we do see another rejection, could see further pressure back towards that 85.60. And if we see a move through there, then that would give further case to the downside. So let's see, first of all, if we can break the level of 88.70.95 to reinstate further case to the upside. Well, that wraps it for today. Thank you very much for joining me. And as always, keep an eye on the intraday report. I hope you enjoy the rest of the day.